Here's the thing. You will not become a consistently profitable trader if you do not have a systematic approach to your trading. And that is why in today's video, I'm going to be teaching you how to build a systematic strategy, how to build a trading strategy that is rules-based. We're going to be doing that together. But before we get into that, I would be willing to bet that the last time you placed a trade, it was based on one of these three factors. Factor one, it was based on a signal you got from a trading guru online. Or worse than that, it was based on a signal you got from a Telegram group full of traders that are probably worse than you are. Factor number two was based on a gut feeling, some kind of emotion, greed or fear. You thought to yourself, I need money right now, so I'm gonna buy the Forex market, buy the stock market. You click the button and you hope and pray that the market goes in your direction. And number three is something I call TOT, which stands for tons of technicals. You saw a ton of technical factors coming together and you thought to yourself, there's no way this does not work out. Look at all these technical factors. But the problem is you're not consistent with which technical factors you use. You have no systematic approach to this. You're not disciplined. You have no risk management. And because of that, you're still consistently losing trades. Now, is this really how you think professional and consistently profitable traders place trades? No. The top 5% of traders place trades consistently based on a full trading plan that is rules-based and systematic, and that's why today's entire video will be dedicated to teaching you exactly how to do that. So with that said, I'm gonna let the intro and disclaimer roll. While I do, make sure you go ahead and subscribe by clicking the button down below the video to the right-hand side that is red and says subscribe. Click the notification bell so you're alerted about more educational content we come out with each and every week. Make sure to go ahead and click that like button for me to help out with the YouTube algorithm, and I'll catch you on the other side of the intro and disclaimer. Just kidding. So before we get started talking about a rules-based and systematic strategy, there's a lot we need to discuss first, starting with what separates a losing trader from a winning trader. Let me draw this graph out for you. Subjective and objective. This tends to be the difference between a losing trader and a winning trader. And don't worry if you don't know the difference between the two yet. I'll be talking about that momentarily. So what does an objective or a winning trader have that a losing or subjective trader does not have? And what's keeping this subjective trader from being able to create a consistently profitable trading career? Well, it starts with the number one thing, which is subjective traders tend to have no rules in their trading at all. And because of this, it leads them to trading based on emotions. It leads them to being confused constantly. Leads them to being inconsistent and frustrated. And right now, if you feel any of these three things, then what I'm going to do throughout this whole video is teach you how to stop feeling these emotions, stop feeling confused, stop feeling inconsistent, and stop having no rules. Key thing here is we're going to create rules, okay? Rules are the reason these things happen. So what's the difference then? Well, an objective or winning trader has a set of rules that they follow every time they place a trade. They have no emotions. They are confident instead of confused because they have put in the work to make sure the strategy they're trading that's rules-based makes money over time, and they are consistent while they trade. So the first step of fixing the problem of if you are being a losing trader is to start with a set of rules. And that's exactly what we're going to dive into right now. I'm going to do a weird, funky transition on the screen, and I'll be right back to talk to you about the rules-based systematic strategy we're going to be trading and you're going to be learning today in this video. So first off, I'm going to tell you a strategy. I want you to tell me, is it objective or subjective? Is it something a losing trader would use or a winning trader would use? So let's say I'm using the 20 moving average and the 50 moving average. And in order for my trade to happen, I need to see the 20 above the 50 MA for a bullish trade and I trade breakouts in the bullish direction when that occurs. Is that objective or subjective? There are rules here, so tell me. Write it in the comments below. This would be absolutely subjective. There are so many pieces to this puzzle that are not in place right now that if I told you to go out here and try to trade this, I told a dozen people to try to trade it. A dozen people may trade it completely differently than one another. That is the opposite of objective and the opposite of what winning traders do. Winning traders have enough rules in place where I could tell 12 traders to go trade a strategy, a dozen, and they would go trade it. Most of them would trade it exactly the same. So now let's take a look at the opposite of this and how we could make this same exact strategy and the questions we need to ask ourselves to turn it from a subjective strategy to an objective strategy. So let's keep our bullish strategy here and just talk about some of the nuanced rules that we need to put in it for it to become objective instead of subjective. Well, for starters, what classifies as a breakout? And at what point do we need to trade a breakout? Let me show you the exact way that I personally create objective strategies every time I create one. I call it the CEST. C-E-S-T. What this stands for is conditions. I may have screwed myself on the, bear with me. Entries, stop placement, and target placement. This is how you create any strategy that you want to create and make it rules-based and systematic. Use CEST. Conditions, entries, stops, and targets. Again, on that last slide we had, the subjectivity there is you don't know where you're putting your stop or your target. That is completely subjective. You need an objective place you're putting your stop. An objective place you're hitting your targets. Otherwise, you may stay in a trade too long and let it run against you. You may make the mistake of taking profits early because you don't have a designated area for your stop loss, for your target, and that's not something you want to do. So let's start with conditions. What are our conditions of the strategy we were talking about a second ago? Well, we said we're going to keep it bullish. For a bullish trade, we wanted to see that the 20 moving average was above the 50 moving average. Okay, that is condition number one. That equals the trend that we're trading with. Let me write CEST up here to make it easy for you guys to remember. So that is our first condition, is we need the market to be in trend. We define trend by 20 EMA above the 50 EMA. With that being the case, let's actually take a look on a chart and see what that would look like, okay? So here we are. We're sitting on the 5-minute chart of the Aussie dollar. This is a trade I'm actually about to show you a live entry on that we took earlier today and hit some pretty nice profits on. What we mean by this 20 moving average above the 50 moving average is, by the way, my black line is the 20 moving average and my blue line is the 50 moving average, okay? With that being the case, all I need to see is that the black line's above the blue line. That gives me my first condition. Let's dive back over to the laptop. So if that's condition number one, now what do we need to see? Well, for a breakout, I want to see some type of pullback. So the rule I'm going to say is that the market must touch the 20 moving average before I place a trade. That is going to give me my pullback. So now I have a rule for the pullback, the amount that I need, and let's go ahead and take a look on a chart to look at that as well. So on the chart, that just means that I would need a market to make a new high and then pull back and at least touch the 20 period moving average. But wait. What if this market goes way lower than that and starts printing candles down here below the 50-day moving average? Am I still, the 20 hasn't crossed yet. Does that mean I'm still in a bullish trend? Okay, so I need a rule here. What's the rule going to be? Well, my rule is going to be that the candles cannot close below the 50. Okay, so now I have my remaining in trend, another trend condition. I have that. I can't see. We'll go back to the charts. We can't see the market start closing below the 50 EMA with candles. If we start closing below it, it invalidates the trade and I can't look for a trade. This is how specific you need to start getting. I'll speed this up a little bit. What do we classify as a breakout? Well, for me, we'll stay on the chart for a second. I classify a breakout as a break and close above the highs of this previous swing high. So if that's the case, then I know that I have my conditions set. These would all fall under the category of conditions, okay? Now for an entry, what did we just say? My entry is going to be a close above highs of previous swing high. So a close above the highs is my entry. So now what have I done? Now I have my conditions, I have my entry. All that's left to do is create an objective rule for stops and targets. This is how you create a completely objective strategy. There's no more guesswork here. I don't have to guess when I'm supposed to take a trade any longer because now I have this set of rules that I can follow, a systematic rules-based approach to every time I want to place a trade. And that is what I'm going to show you right now. I'm going to go and show you a live trade I took on this pair earlier today. Let's take a look at that. I'll be right back. What's up, guys? I wanted to give you an example of a live trade using the strategy you're learning here today. We have our resistance level looking left or right here. The market has, in fact, made a brand new high, pulled back, touched our 20 period moving average right here. And we have not closed below our 50 period moving average right here. With that being the case, as soon as we get a break and close above this level of resistance, we have a valid trade. I'm actually getting in a little bit better because we're seeing this pullback right now. So let's go ahead and click the buy button on this trade, and we are currently involved. So I'll keep you guys updated as this trade plays out, and we'll watch it as the market moves, either hit our stop loss or target. So here we are looking at this trade once more. We're a little bit in profit. I was really hoping to get about 18 pips out of this trade, so I'm not going to close it out yet, but I'll keep you updated as this trade plays out. What's up, guys? We just took profits here on the breakout trade we took live earlier. We ended up with about 18 pips on this 5-minute chart, which is not bad at all. Something like actually about 16 pips. We ended up with about 16 pips. Not too bad considering our stop loss was around 6 to 8 pips. So we did get a 2-to-1 risk reward out of this trade. I just wanted to show you the results of that trade. All right, so there was our trade and the results of that trade. It ended up working out for a profit. It won't happen like that every time. That's the importance of testing. There is so much more that goes into a profitable trading plan than just the strategy. But the very first step that you have to take is creating an objective way you're going to trade, with no subjectivity or as little as possible. And that's going to be the hardest part. That's why I wanted to give you the strategy today. We're going to go through and actually, I'm going to explain the strategy in a second, but let's first talk about the mindset you must have. A strategy, you could learn as many strategies as you want to. If you're not willing to put in the work to back test that strategy so you can gain confidence in it, if you're not willing to put in the work to create a risk management plan that you're comfortable with, then you watching all these YouTube videos is completely useless. You're not going to get anywhere if you don't put in the work that is necessary. You're not going to get anywhere if you don't have the patience to wait for your trades. Don't just jump in the market and be greedy. You need to wait on the perfect situation every time for you to be able to place a trade. And that perfect situation only aligns when all of your rules align. Outside of the strategy, you have to have a risk management plan in place that keeps you comfortable, that keeps you from blowing your account completely. Because guess what? If you do that, you just joined the 95% we were talking about. And the way you don't do that is by having an objective, rules-based way to trade, a strategy that provides an edge over the market, and not risking your entire account because you're trying to get rich quick. Forex is not a get-rich-quick scheme. Forex will not make you rich in the next 6 months, I promise. There's no way, unless you're starting with a huge account and you're a genius, so you're going to learn how to do this in a week. Then maybe. But outside of that weird scenario, Forex will not make you rich over the next 6 months. I know that hurts and I know it sucks. And if that's what you wanted, you can go ahead and click away from the video. But if you want to learn how to trade properly, if you want to learn how to become a consistently profitable trader, that is exactly what I'm teaching you right now. It starts with an objective strategy. Let's take a look at the chart here and talk about this strategy. Let's go ahead and dive deep into the rules that we've already discussed. Take a look at a couple of examples. This was a bullish example, and let's see how these rules played out, okay? Objectively, we're waiting on the black line to be above the blue line. To put it simply, that's the 20 moving average above the 50 moving average. We are then waiting on the market to pull back and touch at least the 20 moving average. That happens here, right? Completely objective. We cannot see any candles close below the blue line. Do any candles close below the blue line? Absolutely not. So that is an objective rule that is met. We then need the market to break out of the last swing high. The close of that candle is going to be our entry. So we have this candle here that breaks out. We have the close of that candle right here. I entered a little bit late, so I got an entry a little bit lower. The stop loss was 1 ATR below my entry candle. If you don't know what an ATR is, it's called ATR, it's average true range. It shows you the average of the last 14 candles, so you can place a stop loss based on the volatility of the market. I'll put a link to a video I did all about the ATR indicator in the top right-hand side of your screen. After that happens, let's go ahead and pull out our position tool. We enter, we have a stop loss below our entry candle, about right there. And the market pushed up. I ended up exiting this trade for about a 1.5 to 1 risk reward a little later on in the day. So what we'll do now is I'm going to bring it back over. We're going to talk about a bearish example, and we'll just scroll the chart back. I have not looked at this whatsoever. Let's scroll the chart back, find a bearish example of this. So first off, would this be an entry, this big red candle right here? Would you be entering on that candle? Hopefully you said no. The reason is because the black line is above the blue line. Therefore, we are not in a downtrend according to our objective rules. You don't jump into trades because you feel like it. You don't jump into trades because you're greedy and you just want money right now. That's not how Forex works. The market does not care if you want money right now. You can lose your life savings in a snap of fingers with this market. The way you avoid that is with risk management and a rules-based approach that keeps you from being greedy and just jumping in because you feel like it. If you haven't heard by now, emotions do not belong in trading whatsoever. And 95% of traders use emotion, retail traders use emotion, and that's why 95% of traders fail. I don't want you to fall under that category. So right here would not be an entry. Where would be our first entry? Well, we can't see one on the chart yet, right? Would this be an entry if we close below here? No, we closed above our 50 moving average. That tells me that the market might head higher. I don't even want to deal with a breakout situation in that case. So I'm not willing to place a breakout trade right then. What about now? Now we have the market pulling back down, creating a low, pulling up, touching our 20 moving average, not closing above our 50. Can I place a trade below this low if I get a breakout? Hopefully you said yes, absolutely. Why? Because all of our rules are met. We have a market pushing down. The black line is below the blue line, right? We have a pullback that touches the black line, our 20 moving average. The pullback does not start closing above my 50 moving average, telling me that that 50 is providing resistance and this market's likely to fall. We then see a close below candle right here that closes below the latest swing low before that pullback, which is right here. In that situation, my trade would look like this. I would have a entry at that candle. The ATR here is 3 pips. So we have 3 plus 3, about a 6 pip stop loss that does not get hit. And we look for, I personally look for about a 1.5 to 1 risk reward. It needs to be objective, but set targets however you feel like it. I personally like to do about a 1.5 to 1 because most of the strategies I trade win at about 60%. And that gives me a really good advantage over the market over a long period of time and over a large sample size. So that was a bearish version of the strategy. Super simple strategy. You can go back and read through the rules that were on the laptop. But again, I want to dive into the fact that this is not all you need. You might lose 3 or 4 in a row using this, and you've probably been through this situation before. And if you're new, please don't fall into this category. There's so many traders that learn from someone online and then go out and expect that strategy to win every single time because they learned it from someone who has 500,000 subscribers on YouTube. That doesn't mean it's going to win every time. I'm not psychic. I've never found a strategy that wins over about 70% of the time. And to get that 70%, I had to go below a 1-to-1 reward to risk ratio. So don't expect magic out of any strategies. Another thing you have to remember is to lower your expectations a little, at least. You're not going to get rich in 6 months, and you're definitely not going to find a strategy that wins 100% of the time. So if you learn a strategy like this, it is your job. I can't do it for you. I can teach you a strategy in 20 minutes that is proven to make money over time. But I can't go out and backtest that strategy for you so that you have the confidence to keep trading it through drawdowns when it starts losing 3 or 4 in a row. But inevitably it comes back afterwards. You won't make it through that drawdown because you have not decided to take the initiative, put in the effort, and backtest it yourself. That is so important. After you backtest, by the way, I'm just gonna break down the exact steps you need to take. Backtest this, okay? Take it through historic data, test 100 trades on your favorite pair. Try pairs that trend a lot. Pound pairs trend a lot, yen pairs trend a lot. Why don't you try the pound yen? Probably be a pretty good idea. So with that being the case, you test that for 100 trades in the past. Guess what? If it didn't work out of the past 100 times that you tested it on the pound yen, let's say. And what I mean by didn't work is that out of those 100, if you didn't win over 55 of them, if you didn't win over 50 of them with a 1.5 to 1 risk reward, then it's not, if it didn't win over that period of time, why would you want to trade it in the future? This is why you have to test things that you learn from me or anyone else. It doesn't matter. Just go out and test it yourself to ensure that it's profitable and to give yourself the confidence that you inevitably need to get through drawdowns that will happen. So that's the backtesting part. After you backtest, in order to gain even more confidence, you need to go through and demo trade to make sure you can accomplish this strategy on your schedule, with your daily job, with your daily obligations, whatever they may be. And it also is going to help you build confidence. People constantly ask me, Steven, how do you become patient? How do you get more discipline? Those are the 2 steps you take. Stop trading with live money. You're not going to get more patient or be more disciplined if you're constantly losing money. You're just not. So the plan of action needs to be that you take and test a strategy. You then demo trade that strategy to prove to yourself you can actually do it with all the obligations you have outside of trading in life. And then you can consider going in the markets with real money only after those things are done. Because guess what? As always, we have anybody that's a professional trader has mastered these 3 things. I do this a lot, and it's because this is one of the most important parts of trading, and it's one of the things that allowed me to become profitable. And that is what I call the triangle of trading success. At any point that you become profitable, the reason will be because you mastered these 3 areas of your trading, what I call the triangle of trading success. In the middle of this triangle is you making money. On the outskirts of this triangle, number 1 is exactly what we talked about at the beginning of the video. It's this strategy that's rules-based and easy to follow. It is your strategy. That is the first step in anyone becoming a consistently profitable trader, is finding a strategy that makes money over time. Second is a risk management plan that keeps you from blowing your account initially. You can't blow your account because then what are you going to trade with, right? But you want a risk management plan that doesn't only just keep you from blowing your account, it also keeps you from getting hyper emotional during your trades, from freaking out if you lose 2 in a row. You need a risk management plan that keeps you from doing that. You also need the discipline to follow these other 2 parts of your trading plan. The way you get that discipline is through backtesting and demo trading. I hear it all the time. Backtesting's irrelevant. It's just dumb to do. Backtesting is what gives you confidence and ensures that you're trading some kind of systematic, rules-based strategy that's made money over time. It's the only measuring stick we have. We can't predict the future. So if you're not going to predict the future and you're not going to look at past historic data, how are you going to learn how to trade? Then what, right? That's why I always harp so much on back testing and on demo trading to improve discipline of any trader out there. If you're having trouble with that, those are the things you need to do. That said, I hope at this point you have everything you need to take a strategy, whether it's this one or not, make it rules-based as possible with the CEST system that we have right here. Make it as rules-based as possible and start to become a systematic objective trader so that you can start your journey today to a more profitable tomorrow. I sound like a sci-fi movie or some kind of like weird commercial. But seriously, if you start doing this today, it'll increase your chances of becoming a profitable trader dramatically. And that's why I wanted to push this video out to you guys. If you enjoyed it, click that like button. If you would like some more advanced training and to know the strategies that I come up with and use on a daily basis, then we've just added a new piece to the EAP training program. It is called the Strategy Lab, which means I'm going to be putting all of the pudding. It almost sounds like I said pudding that you eat. I'm going to be placing all of the strategies that I create over the next 6 months, year, however long, that I create into the strategy lab. That way you'll have a chance to see the newest strategies that I'm working on. I think that's a very powerful tool. If you want to get more info on the advanced training, it is linked in the description, labeled EAP. Again, I hope this video was valuable. If it was, please click that like button. Comment below if you lasted till the end. It was a 30-minute video. Good job if you lasted till the end. Can't wait to see you guys in the next one. With that said, I'll talk to you very soon. Wish you good luck and good trading. See you then.